2012, we've seen the recovery of liquidity on large transactions, especially transactions involving foreign investors like Catella, German, and to a certain extent, I think also Chinese investors. For next year, what I can tell you is that we carry out every 4 months, roughly, 4 months. Yes, every 4 months, a survey of the main investors in France. And first, regarding France, they are expecting that volumes are going to go down compared to 2011 and 2012. And second, when we ask them what kind of countries they would like to be invested in, their first choice is Germany and the UK. So it's very consistent to what Madi just explained.
Well, actually, the German investors do have on one side a high stake in German investments. So if you see the German turnover over the last 3 quarters and the expected transaction volume in Germany in 2012, which is in an investment something around 20 billion, something around 80% is from domestic investors. So the German investors care about German assets, so investing in two different areas. One is the core markets, like the top 5 in Germany, and on the other side you do also have the Germans investing in regional in regional markets, in regional prosperous cities. And on the other side, if you look at France, the investment volume which goes outside of Germany is not as high as the investment in Germany itself. So as the Germans normally are stable and taking the road that they already did, it's from my point of view, it's not really increasing investments in other countries than in Germany.
Yes, about the Nordic countries, they were very local since probably 10 years or more than that. They had, if you remember well, a very bad experience in Europe 15 or 20 years ago. So they are now very cautious before investing in Europe and in south of Europe, and especially in France. But the good news is there are now probably 2 or 3 very serious players looking at the French market, and not only looking, active in the French market. The most important one is Norway Petroleum Fund, Norges, who has recently invested approximately 2 billion euro in partnership with different players like AXA Group and Generali, and probably another one in the next future. At the same time, other, let's say, state-owned pension funds are looking at the French market as well, with probably equity between 500 million euro and 1 billion euro, which is good, especially for core assets. And probably 1 or 2 others are coming, but always really focus on the core assets.
You know, I agree with everything that's being said. I think France is still considered as a safe real estate destination, so long as you can provide stable cash flows. Opportunistic capital is really staying on the sidelines. We view our culture, we view ourselves as creators of core products, so we take risk upstream, trying to design shopping centers or residential or office that will have core elements to it, either from a location standpoint or from a quality or product standpoint. And frankly, there I think the big issue for us is the office market.
Talking about the way France is viewed, or France's real estate market is viewed, when we talk with investors, not only in the UK, but from wider sources of capital, I think they associate France with the Eurozone. That's probably why there may be some risk aversion out there. They perceive the diversity of the market and the good qualities of this market being relatively widely spread with a very diverse tenant base. I think they just love the retail sector from a shopping center and high street, but lack of product is what we hear most about. Now, when they look at Europe in general, a lot of investors, essentially coming from the Southeast Asia and also at Asia Pacific, look at Europe with their capital as rescue capital. This is a region perceived to be in need of rescue capital. But in the end, when you look at France's situation, we haven't seen a lot of distress. We haven't seen a lot of such projects coming to the market. Where we have seen such market clearing between distressed sellers and opportunistic buyers, we've seen that in the UK to a much larger extent. And when you talk to UK investors, they think that the market is not mature enough in continental Europe and in France in particular, and that wave of sort of market clearing will happen for some distressed property stacks and capital stacks where you have smaller retail units, mid-sized shopping centers in need of capital expenditure. They haven't been well capexed in the past 2-3 years and need to be repositioned. And that's probably where you're going to see a lot of market clearing.